Here's a detailed summary of Eli Lilly's Q2 2026 earnings call transcript, designed for clear and concise reading aloud. Introduction. Good morning, and thank you for joining Eli Lilly and Company's Q2 2026 earnings call. Today, we'll be discussing our strong financial performance and strategic advancements. Our comments today will focus on non-GAAP financial measures. CEO's key statements. Dave Ricks, Chair and CEO. Q2 continued Lilly's strong momentum. We delivered robust revenue growth across all key products and major geographies. We raised our full-year annual guidance. We advanced our pipeline across each of our therapeutic areas and expanded our pipeline through business development. He highlighted the significant growth in oncology, immunology, and neuroscience, the strong momentum of the Foundayo launch in the U.S. and its international expansion, key pipeline and regulatory milestones including approvals for Ebglyss and Jaypirca, positive Phase 3 retatrutide results, strategic business development acquisitions, manufacturing advancements, and the important milestone of improved Medicare access to anti-obesity medicines through the GLP-1 Bridge program. Ricks also emphasized Lilly's commitment to sustainability, particularly in resource-limited settings. CFO's key statements. Lucas Montarce, Chief Financial Officer. As shown on Slide 7, Q2 was another strong quarter of financial performance. Montarce detailed the robust revenue growth, driven by Zepbound and Mounjaro, and strong momentum across all therapeutic areas and geographies. He reported an increase in gross margin percentage due to favorable product mix and improved cost of production, as well as significant investments in marketing, selling, and R&D. He also provided non-GAAP earnings per share and highlighted revenue drivers by geography, specifically noting strong growth in the U.S., Europe, Japan, China, and the rest of the world. Financial highlights and performance metrics. Revenue growth. Revenue grew a remarkable 48% compared to Q2 2025, driven by key products like Zepbound and Mounjaro. Key products collectively grew by almost $6.8 billion, with oncology, immunology, and neuroscience medicine showing a 121% increase year-over-year. Gross margin. Gross margin as a percentage of revenue was 86.3%, an increase of approximately 1.3 percentage points from the prior year, attributed to favorable product mix and improved production costs. Expenses. Marketing, selling, and administrative expenses increased 25% due to investments in promotional activities. R&D expenses rose 14%, reflecting continued pipeline investment, with over 40 active Phase 3 programs. Non-GAAP performance margin. This stood at 54.8%, a substantial increase of 9 percentage points from Q2 2025, primarily driven by revenue growth. Non-GAAP earnings per share, EPS reported at $8.38, including $3.03 in acquired IPR&D charges. This compares favorably to $6.31 in Q2 2025. U.S. revenue increased 33%, primarily driven by volume growth from Zepbound and Mounjaro, alongside contributions from other portfolios. U.S. price declined by 3%, largely due to Zepbound and Mounjaro, with a further 9% decline excluding specific rebate and discount adjustments. International revenue. Europe grew 55% in constant currency, fueled by Mounjaro, and also benefited from a $250 million Jardiance milestone payment. Japan grew 30% in constant currency, driven by Mounjaro and Kisunla. China saw a 93% increase in constant currency, with strong Mounjaro uptake. Rest of world experienced 136% growth in constant currency, largely due to Mounjaro in Latin America and Asia. Key product performance. Immunology. Ebglyss worldwide sales more than doubled year-over-year. Oncology Jaypirca demonstrated strong growth, with worldwide sales up 56%. Inliro is the U.S. leader in new prescriptions for the metastatic breast cancer oral SCRD market. Neuroscience. Kisunla continued its strong revenue growth, expanding its leadership in the U.S. anti-amyloid targeted therapy market. Diagnostic testing. Momentum is also increasing. Cardiometabolic health. Mounjaro and Zepbound combined for $14.9 billion in revenue, contributing $6.3 billion in growth. Incretins. Total prescriptions in the U.S. incretin analogs market grew 31%. The U.S. incretin analogs obesity market saw prescription growth of 78%, with Lilly's portfolio leading. In the U.S. type 2 diabetes incretin analogs market, prescriptions grew 9%. Internationally, the market increased 74%, with Lilly holding approximately 55% share. Foundayo launch and updates U.S. launch. Progressing well, with increasing prescriptions and market share for new patients. The Medicare GLP-1 Bridge program, launched July 1st, is a significant opportunity to expand access for eligible seniors at a low out-of-pocket cost. Broad direct-to-consumer marketing has begun to raise consumer awareness. International launches. Initial approvals received for obesity in UAE and Saudi Arabia, and for obesity and type 2 diabetes in Mexico. Early uptake in the UAE has been encouraging. Foundayo is under regulatory review in over 40 additional countries, with a global rollout in major markets expected in 2027. Inflection point. The company is starting to see an inflection point for Foundayo, with volume nearly doubling in the last month and about 1 out of 4 new starts now on the medication. Pipeline and business development pipeline advancements. Cardiometabolic health. Positive Phase 3 results for retatrutide in obesity and type 2 diabetes, showing profound weight loss and improvements. U.S. submission for retatrutide is planned for Q1 2027 via the BLA pathway. U.S. submission for orforglipron for type 2 diabetes completed, with superior glycemic control and weight reduction shown in head-to-head trials. Positive CHMP opinion for insulin efsitora alpha in Europe. Promising early data from the Verve 102 gene editing program for cardiovascular disease. Neuroscience. Agreement to acquire Atibeckley to advance rapid-acting neuroplastogens for treatment-resistant depression. Clemorexton added to the pipeline for central hypersomnias. Oncology. Positive Phase 3 results for pirtobrutinib in CLL, showing a 45% reduction in progression or death risk. Impressive Phase 3 data for selpercatinib in adjuvant RT fusion-positive non-small cell lung cancer, reducing recurrence or death risk by 83%. Encouraging early data from acquired hematology programs, AJ1-11095 and KLN1010. Immunology. FDA approval for new maintenance dosing for Ebglyss, allowing for fewer injections. Pediatric indication for Ebglyss submitted. Phase 2 trials initiated for brensocatib in irritable bowel syndrome, and for an FXR agonist in combination with mirikizumab in Crohn's disease. Business development. Acquisitions of Curivo, shingles vaccine, Limitech Biologics, bacterial infection vaccines, and vaccine company, Epstein-Barr virus vaccine, to expand into emerging therapeutic areas and prevent infectious diseases. Acquisition of Atibeckley for mental health treatments. Manufacturing expansion opened the first dedicated genetic medicine manufacturing facility in Lebanon, Indiana. Produced the first batch of commercial material at the new manufacturing site in Limerick, Ireland. Shareholder returns distributed $1.5 billion in dividends in Q2. Executed $1.6 billion of share repurchases. Full year 2026 guidance revenue raised to between $85 billion and $87 billion, an increase of $3 billion on the low end and $2 billion on the high end. Non-GAAP performance margin raised to between 49% and 50.5%, an increase of 2 percentage points at both ends. Non-GAAP EPS expected to be between $35.50 and $36.50, an increase of $2.78 per share at the midpoint before Q2 acquired IPR&D charges. Significant risk factors. As mentioned in the transcript's disclaimer, actual results could differ materially due to various factors, including those detailed in Lilly's Form 10-K and subsequent SEC filings. Specific risks were not elaborated upon in the provided transcript excerpt, but general forward-looking statement disclaimers were made. Highlights of the quarter: exceptional revenue growth, 48% year-over-year, driven by key products. Raised full-year guidance. Significant upward revision for revenue and profitability. Foundeo momentum. Strong U.S. launch progress, with an inflection point appearing and encouraging early international uptake. Pipeline progress. Multiple positive Phase 3 trial results. Retatrutide, pirtobrutinib, selpercatinib, regulatory approvals, Ebglyss, Jaypirca, and strategic business development acquisitions. Medicare access expansion. The GLP-1 Bridge program is significantly increasing access to obesity medicines for seniors. Manufacturing investments. Expansion of global manufacturing capabilities. Lowlights/areas of note, not explicitly stated as lowlights, but points of discussion. U.S. Foundeo launch pace. While showing inflection, the initial launch curve was described as somewhat slower than anticipated by an analyst, though management expressed confidence in future growth. Zepbound and Mounjaro U.S. price decline. A 3% decline in U.S. price for these key products, with a deeper decline excluding certain adjustments, as is common in the pharmaceutical market. Litigation on retatrutide pathway. Ongoing discussion and litigation with the FDA regarding the BLA pathway for retatrutide. International competitive dynamics. Awareness of competitors launching oral options in key ex-US markets. Conclusion. We delivered strong business results, received regulatory approval for new indications, shared positive Phase 3 trial results, added new medicines to our pipeline, and expanded access to medicines for patients. While we're pleased with our progress this year so far, we're not satisfied. We remain focused on executing the 3 components of our strategy to deliver sustained long-term growth, broaden our impact on cardiometabolic health, expand our presence in other therapeutic areas, and invest to drive future growth. This concludes our summary of Eli Lilly and Company's Q2 2026 earnings call. Thank you.